Wonderful good evening, ladies and gentlemen, and welcome back to a new SabioTrade webinar. It's me, Markus from Dow Trading, and I'm really glad to welcome you here on this SabioTrade YouTube channel. And today with a very interesting topic, how to trade with stochastic oscillator. You know, the one of the last webinars was about indicators, and we mentioned that we have so almost a limitless universe of indicators you can use here on SabioTrade platform. And today we want to pick up one of those indicators, and this is the stochastic indicator. We want to dive a little bit deeper in the origination of this oscillator indicator, and how you will find it on the platform from SabioTrade, and how you can use it for your trading, a little bit in cooperation or connection with a trend following system. It's an interesting thing where to buy and where to sell. So if you have any questions, feel free to ask. The chat is open here on YouTube. Maybe you are online, you are live anywhere on your phone, on your iPhone, or wherever you are. Type in the chat box, maybe where are you from, where you're placed, and how are your experience with SabioTrade and with your trading. I don't want to talk about so much about me. That's not the interesting topic. As my mentor would say, boring. It's boring to talk about yourself. This is not what we are doing. We just talk about real trading and just, I do trading for a living for 25 years now. I'm a teacher, trader in different assets. And of course, I have my own Dow family and community. And I teach trading. I teach people how to make money, especially with this brand new partner, SabioTrade, how to become a 1 million. Simeon from Nigeria, greetings. How are you doing? I am doing good. Thanks for being here. And you will find many information on my homepage, dow-trading.com. I will show you a little bit later. And of course, afterwards, I give you the link in case you want to open a new account here on SabioTrade and follow maybe the pro version right now. There you get, as a pro client, that's the new promo from SabioTrade, you get my brand new online course with the trend following system. You should really use this because it's really for free the moment you open a pro account. We will have a look at the homepage of from SabioTrade. By the next minutes, we want to dive deeper into the topic how to trade with stochastic oscillator. Okay, this is Mr. George Lane. As you can see, he's a charming man, lovely smiling. Why are you laughing? Yeah, I have to mention my mentor is sitting in here in my apartment. He is visiting me here in Bangkok, and thanks God he's leaving me in 2 days again. Then I have only me again. So we have a lot of fun. And when we preparing this webinar, we saw this picture, and we mentioned both Mr. Lane is a smiling, charming man, but he was developed in the late 1950s, the stochastic oscillator. And as designed by Mr. Lane, the stochastic oscillator presents the location of the closing price of a security in relation to the high and low range of the price of a product over a period of time. Maybe you're trading 1 minute chart or 5 minute chart. And typically he created this stochastic indicator with a 14-day period. In real practice, I would not use 14 period trading. I always would use kind of Fibonacci number, like 8, like 8 or maybe 13, and so on. Not the common period of 14. Everybody's using this. But if you use a little bit Fibonacci numbers, then you have a little bit more advantage in using this stochastic oscillator. So Lane over the curious of number. Can I change my picture? No, that was the wrong one. Cannot. So Lane over the course of numerous interviews, he said, has said that a stochastic insulator does not follow price or volume or anything similar. So then we have to figure out what does the stochastic indicator tells us when he's not following the price. So we have kind of following indicators and we have lagging indicators, yeah, and this is none of those. So let's see about the brief history. Mr. Lane indicates that the oscillator follows the speed or the momentum of the price. And if you follow my webinars and my YouTube videos here on YouTube, then you know that everything happens in the market, you can see at the price, because at the end, price creates a volume, creates the new price. And this is what Mr. Lane also figured out, and that's why he said it indicates, follows the speed, the momentum of the price. And in some interviews, he reveals that as a rule, the momentum or the speed of the price of a stock changes before the price changes itself. Let's repeat this one, it's really important. Mr. Lane also reveals in interviews that, as a kind of a rule, the momentum or the speed of a price of a stock or whatever kind of product you trade there changes before the price changes itself. This is what he figures out in his late, I guess he was really kind of an elder people when he created this indicator. And in this way, the stochastic oscillator can be used to foreshadow reversals when the indicator reveals bullish or bearish divergences. And this is really interesting because, I'm a fan of divergences because it's one of the most used technical indicators, and it's one of the interesting things in the divergences, because then volume and price have different meanings. Price is going up but without less volume, and on this divergences we have many AIs and many AEAs that follow some interesting divergences. So, and this signal is the first and arguably the most important trading signal Mr. Lane identified, that the speed of the price changes before the price changes itself. That was too quick. So let's see what is a stochastic oscillator. A stochastic oscillator is a momentum indicator comparing a particular closing price of a product or a security to a range of its prices over a certain period of time. The sensitivity of the oscillator to market movements is reducible by adjusting the time period or by taking a moving average of the result. And it's used to generate overbought and oversold trading signals, utilizing between 0 and 100 the number 100 bounded range of values. And you see the little bit in the picture I put here in the slide. You see there are the red line on the lower side and the green line. We can have a look at the real market. You can see it here. That's a real Sabio platform here. And you see there is the line of the 80 of the 20 on the lower side, yeah, and 80 on the upper side. That's the typically ranges of the stochastic indicator. Yeah. So, and here you can set, for example, you can set here what kind of numbers do you want? Smoothing 3, 80, 20, and you see I have a period of 13 because I love the Fibonacci numbers, and 13 and 3 is a typically Fibonacci number. So, and then you can see we have this kind of overbought and oversold state of the price. And this is what this indicator indicates and shows you. It's generate the signals of overbought and oversold trading. So let's see what the indicator, what this stochastic oscillator tells us. It's a range bound. It's kind of simple, and meaning it is always between 0 and 100. And we have on the bottom line the 20 line, and on the upper line the 80 line. And over 80, over the 80 number, we call it's overbought. And on below 20, we call it oversold price. And this, how you can use it. So basically, it's the logic. If we indicates that the price is overbought and the indicator is over 80, then basically we are looking for a selling signal, but not blindly. Of course, in God's sake, not blindly. We have to use more information, not only say, now it's overbought, push the sell button. This is stupid. We don't do that. So, and on the seller, on the lower side also, you don't push the long button. It's in an oversold status. You have to see more, and that's the sense of this YouTube video that I show you, in which how we can use it in a different way, where we can use different information, not only blind, in a blind way to go long or short. Traditionally, readings over 80 are considered in the overbought range, and readings under 20 are considered oversold. However, these are not always indicative of impending reversals, whereas strong trends can maintain overbought or oversold conditions for an extended period. That's what I'm talking about. Not to push the button, just sell or buy when the price is overbought or oversold. So you need to other ideas or clues about future trend shifts, and this is why you really should have a deeper insight about trend following. And this is because the trend following system, it's the nature of trading. So it doesn't matter if you use any other indicators like moving averages, or if you use any Elliott waves or whatever there is. You always need more information, just only the indicator. So the stochastic oscillator charting generally consists of two lines. One reflecting the actual value of the oscillator of each session, and one reflecting its 3-day simple moving average. Because price is thought to follow momentum, intersection of these two lines is considered to be a signal that a reversal may be in the works, as it indicates a large shift in momentum from day to day. And you really should consider that the lower the time frame, the faster the price changes are. So be careful. I think such indicator like a stochastic oscillator is really usable in higher time frames, maybe like 4-hourly chart or maybe 6-hourly chart, something like that. So be careful if you use it in 5-minute charts, because a trend is always stronger than every freaking indicator. Be careful. That's why you should not push just only the button. So divergence between the stochastic oscillator and trending price action is also seen as an important reversal signal. That's why we have a look on this in a couple of minutes. For example, when a bearish trend reaches a new lower low, but the oscillator price prints a higher low, it may be an indicator that bears are exhausting the momentum and a bullish reversal is brewing. And this is why we should use this divergence Yeah, that we see the price and the oscillator, and this is a cool thing. Not only the overbought or oversold state. Yeah, just figure out if there are kind of price changes also. Yeah, so let's see an example. The stochastic oscillator is included in the most charting tools in SabioTrade also, and can be easily employed in practice. So we don't use the 14-day number. We can adjust it to 13, as I told you. Yeah, and the stochastic oscillator is calculated by subtracting the low for the period from the current closing price, dividing by the total range for the period, multiplying by 100. Yeah? And by comparing current price to the range over time, the stochastic oscillator reflects the consistency with which price closes near its recent high or low. Yeah? A reading of 80 would indicate that the asset is on the verge of being overbought. Yeah? So let's have a look at the real one here. So actually, this is DAX, German index, in 5-minute chart. Yeah. So that's just, I need my drawing program. Here we go. There we go. There we go. So, okay. So for example, here we go. You see, basically, there is here kind of oversold. Yeah, here you see oversold. Yeah, so the price is also more in a low. Yeah, so it just indicates a little bit. Yeah, so we have an overbought status here, and the price, you see, also overbought. Yeah, and then the price is falling down. Then we have the oversold status. Yeah, and finally the price is increasing a little bit. Yeah, so then it's, you see, then we have an overbought status. Yeah, you see, but the price doesn't care. It's going up again. So you see, you cannot push the button blindly. Just, it's overbought, now it can go short. No, you should not do that. Yeah, you should not do that, because you see, the indicator does not go below the 20 line. No, it's going up again, and then we have another overbought status. Yeah, and then the price is going short. It's going down. So interestingly, and then you see we have an oversold, and then the price is going up. Yeah, and finally, then you see, okay, that's now there. Finally, there is a trend. And now you can use it, and trading just from the correction. If you have an oversold, then you have a trend, and you are in a correction, then it's a cool buying signal. And not going short just only if you are in a running trend, just not going short. Use this indicator, for example, if the price is coming into the correction and you have this indicator of an oversold status, yeah, then it's a buying signal. Not against the trend. Never fight against the trend, as long as you don't have signals or kind of rules for that. Yeah. So, but let's go a little bit deeper. Let's go a little bit deeper, and I show you what does it mean to have some divergences. So, for example, you see, we have, I pointed out for you. So you see, first of all, that's a high. There was a high. And it was the first time here in the overbought. And then the price was increasing to a new high. And the indicator is following and creates a new high also. So, and then it's interesting, the price is correcting and creates afterwards a higher high. Just a bit, but it was a higher high. And here there is a divergence, because now you see the indicator makes not a higher high. And this is what we talk about divergences. This is a divergence when the price and the measurable indicator shows different information. Yeah, that's the interesting part. And this you can use to create a short position. Yeah, but at that point we don't talk about money management and trade management, because that's the other points. You will find a video about a conservative risk management here on the YouTube channel if you Google about my name, and then you will find it on the YouTube channel here. So, and that means you need, beside of any kind of signals, you need a proper or best, at the best, a possible and conservative risk management, because not every trade will be a winner. We just have to work with probabilities, and therefore you have to know that there will be losers also. So for that you need money management, of course, and you need a trade management. Yeah, because it's just one thing to say, okay, there I have a signal, so maybe I'm going short there, and I have my stop loss maybe really close above the high. That's just only one decision. You need to know, where I have to go out. When I go out of this trade, do I have a risk reward ratio that I say, okay, that's the distance to my stop loss. I use the same distance to my target. Yeah, this is one possibility. Yeah, or the second, or another one. Yeah, you follow every single candle. Yeah, but then I would not do it on 5-minute chart, maybe on hourly chart. Yeah, because in 5 minutes you have high volatility, and then the next candle you're out. Yeah, I think it's a good idea to work with a cool risk reward ratio of maybe 1:1. Yeah, same distance to your stop loss, same distance to your target, like we do in our Dow family. And I showed you in one of the. I have to say sorry, I'm a little bit tired because here it's almost midnight. I'm in Bangkok, as you can see, it's really dark in the back, and we have after 11 p.m. right now. So I'm sorry, I'm a little bit tired. Okay, so now I show you another really interesting signal, and the difference between a convergence and a divergence. So you see on the lower side you have a falling price, a lower low, and the indicator makes a lower low, which means price and volume are equally strong. Yeah, so therefore, you should really be careful with such signals. Yeah, the best signals are really divergences. Look, and here is a great divergence. Look, we have a lower price and a new lower price. You see, that's falling price. There was a little bit correction in between. Yeah, and then you have a lower price, and then you see the stochastic indicator. First of all, it's in an oversold status. Yeah, that's the first information you need to know. Never buy in between the lines, overbought, overbought, or oversold. Yeah, so and the next you see there is a divergence. You see the price is falling a bit after a small correction, but the indicator changed the move, changed the speed slower, and changed the speed to go up. Yeah, and then the market is reacting, and then perfectly you see on Heikinashi a balance candle. So you have more than one signal. You have 3 signals that give you confirmation that on the short side we are done. First information, the stochastic indicator is in an oversold state. Second information, you have a divergence. And as a real signal, you get, that's why you should Heikinashi, you get a balance candle, or maybe the change of the color, and look what the price is doing. Speed is moving up, and then you can follow the trend. Yeah, that's perfect signals. And guys, it's worth that you wait for such signals. It's really worth. It's like you have some negotiation. What are you eating?
Thai food.
Ugh. Really? A sweet one?
Yes.
Ah, okay. You should really wait for that, not take every signal. It's like you make some negotiations with your market, yeah? And you should only give the money to the market when you have the benefits and the advantages on your side. Yeah? And if the advantages are not on your side, don't give the market your money. Yeah? Don't be that stupid. Only if you see, if you have kind of negotiate with your market, and then you see, I have advantages. So I'm oversold, I have a divergence, I have a balance candle, bam. And then you can work with that. Yeah. So let's see if you find another signal like that. But then you see following that we have a lovely uptrend. And then you can follow the trend. It was just a cool entry signal. Yeah, you can see the price moving the red candles or the corrections always. Yeah, and you see I have a 50K account and I'm in profit, but you can see here my positions. My trading, you can see, we have more profits than losses. Yeah, and this is how it works. Yeah, that's why I'm in profit. Yeah, so let's see if you find another signal. Here we go. A little bit, and here you get an interesting part. So I pointed out for you. So look, there we have a kind of a double top. You see, that's a double top. We have same price. And the indicator shows you a lower high. This is also, I call it a class B divergence, because you don't have a higher high in the price, you just have a double top. Yeah, but it's a divergence because the second double high is not confirmed by the indicator, because the indicator, stochastic indicator, makes a lower high. So this is a kind of class B signal. The other one was an absolute AAA signal. This is just class B. It's just like you buy used clothes in the store. But you see the price afterwards is falling down a bit. Yeah, but you have also maybe a clear 1-in-1 ratio. You make an entry because there you have the change of the color on balance candle, entry, stop loss above, and the same distance you use on your target, and you reach the target immediately. Yeah, so this is how you can use this indicator. So let's go a little bit further, but you see, basically, you should not expect that the price is falling down and down and down and down, because you see the trend is going up, and never fight against the trend. You should never, ever fight against the trend. Never, ever. Yeah. You will lose all your money. Don't be that silly. Yeah. So now I show you interesting convergence. Yeah, look, this is a convergence. So you see they have higher prices, and the indicator creates also a higher high. Yeah, so and you see they just have a little bit dropping down, and then it's going up again. This is not a really good signal. Yeah, this is why you should not just only sell or buy when the price or when the indicator is in an oversold or overbought state. Always wait for a trend and confirmed signals. This is so. Let's see what we can do on the right side. So you see, I have a pending order. You see, I have a pending order short. Why do I have a pending order? Because I have a downtrend. I have a downtrend. Look, and this is my downtrend. That's my downtrend. We're starting at the top. The first one. And here we're going there. And there we are on the correction. So there I have my stop order. Basically, I don't need any indicator for my own trading. But this is how you can use this indicator for your own trading. So at the best, as I mentioned, wait until the stochastic indicator is in an overbought or oversold status. Yeah, and the next, wait for a divergence. And let's see if you find you can use it in higher time frames also. Let's change it, for example. Yeah, we change it here maybe to 1 hourly chart, and let's see if we find any cool signals. Let me see. Find any cool signal. It's not. It's not. It's not. No, not really. So you see, there's a long-running trend here, why you should never fight against the trend. As you will never bring your money into the profit. Just you see, this is a perfect example why this indicator fails sometime. You see, the price is going up and up and up and up and up and up, and you see we are many times in overbought status. Yeah, but the price didn't fall. Yeah, the price didn't fall. The indicator goes down a bit, but the price didn't really fall. Yeah, so you should never fight against the trend. This is what you should learn first, how to recognize the trend. Yeah, so really be careful with what are you doing in the market. This is why we offer here on SabioTrade many things you should learn. Okay, so what's the limitations of our oscillator? The primary limitation of the stochastic oscillator is that it has been known to produce false signals. Yeah, what we saw now in the market. And this is when a trading signal is generated by the indicator, but yet the price does not actually follow through, which can up as a losing trade. And no indicator is the holy grail, not an oscillator and not the indicator. Yeah. And during volatile market conditions, this can happen quite regularly. Yeah? So be careful if you use those indicators. And one way to help with this is to take the price trend as a filter, trend following, where signals are only taken if they are in the same direction as the trend. So maybe you should recognize, you should make a note for the 3 points. Stochastic indicator, overbought or oversold. First one. Second one, use divergence. Yeah. And third one, use Heikin Ashi, balance candle or change of color. Yeah. And then maybe a risk reward ratio set up, stop loss below the low, and 1:1 ratio to the target. And if you see, there's creating a trend, then maybe you can increase your target and follow the trend instead of using a fixed target. Yeah, this is how you can use it. So let's make a quick conclusion. A stochastic oscillator is a popular technical indicator for generating overbought and oversold signals. It's a popular momentum indicator, first developed for Mr. George Lane, a charming, smiley guy like me, in the
inventor of the support line.
in the 50s, but I'm not born in the 50s. And stochastic oscillators tend to vary around some mean price level since they rely on an asset price history. Yeah. So, and before we close, I want to show you, of course, I'm in profit. How cool is that? How cool is that? Yeah. So, first of all, if you go on the homepage, first of all, I want to show you this one. And here we go. Community. Here we go. My groups. Because I want to give you the perfect link. So here we go. And this is the link, please. I put the link in the chat. And if you want to open a trade, if you open a new account, then please use this link in the chat box right now. Yeah. So you open this one, and then you come to the SabioTrade, and here you can get funded, because never use your own money for your trading. Yeah, it's really counterproductive. Use always. So, and we have the SabioTrade, and there we have the app, and at the end you see we have especially perfect 20 is actually the discount. Yeah, instead of 190 you get 99. Yeah, so then you can get funded now, and you can use it for every product. And at the best, what we can use now, yeah, is the pro version. Yeah, I show you. If you have already your let me show you. So, for example, that's the pro version. Go fully Sabio to the pro version, yeah, and you have just 3 assets attempts. Or in the big one, you have 12 asset attempts, 12-month access, and 20K total balance. Yeah, and you can have really, really interesting parts here, and you can use it. So never use your own account. Use this, what we show here on SabioTrade. Yeah, that's very important that you understand not to use your own money, take funded money. And with this, what we talked about, for example, with the stochastic indicator today, it's really interesting. Yeah, so if once you have your account and you have your asset, you can complete it, and then you have access. If you use the pro version, for example, then you have access to my logic online course. Here you get it for free once you open the pro version from SabioTrade. So guys, that was my part. Thank you very much for listening. I hope you could take a little bit for your own trading, and I'm looking forward to see you in 2 weeks when we have the next topic. Thank you very much. I wish you a beautiful night and the rest of the week, and we see each other and the competitions and assessments of SabioTrade. See you. Bye-bye.